Hi everybody, this is Jeff, and I wanted to do just hopefully a quick little video here on a position that I'm currently in right now. And today is Monday, 8/23 of 2010 after the market has closed, and I am in a iron condor right now on Chicago Mercantile Exchange, CME. Let's take a quick look at a chart, and I want to just shut the news off here so I can get a little bit more room. This is the profit zone. This gray box here on this chart is the profit zone for my iron condor. It's a September iron condor, and I'm a little fearful that possibly this might be heading south. And I'm fearful that the whole market might be heading south. And you can see that this trend line that I drew here actually shows that I should have been a little bit more biased towards the downside when I entered this trade. But just to let you know that sometimes, I thought that CME was a good stock without even looking at the charts, and I should have looked at the charts and just let the price tell me what was happening. But I tended to just kind of ignore this. I thought this little dip right in here was possibly going to show me some strength, maybe bring me up to this resistance level and then back down at the end of expiration, which it still might do. But I'm a little fearful right now of the direction of the market, so I'm preparing to do an adjustment on this, and I want to show you what I'm thinking about. So let's go over to the Analyze tab, and this is where the iron condor is right now. You can see that delta wise I'm at 1545, and that's not really all that bad. But again, I just want to be ready in case this continues to head south. You can see that at this moment, as of the close today, I'm up $44.89, or myself and the guru, who are one and the same, are up $44 on this right now. Entered it on, I think, the 18th. I just go over to my spreadsheet here, and this is what you see when you look at my blog. This particular line right here is CME, which I did enter on the 18th, so it's been about a week, and I entered with two of them, and I was looking for a credit of $680 to maintain that credit. The risk that I had was $1,316 on this, so this was like about a 50% gain if it would stay inside of that nice little gray box that I have up here on the chart. That is right here. Chances are it could stay in there, but like I said, what do I do if it doesn't? And my anticipation is that this is going to head south. So what I thought was basically was closing this end of the iron condor here, which is a bear call, closing it and rolling it down to a 250. Right now it's at a 260, which is this 260 270 call here. I'm rolling it down to 250 260, and rolling this end of it down also from a, right now it's at a 230 220, and rolling it down to a 220 210. And I expect to lose a little money on the deal here. So right now, like I mentioned, $684 was the credit that I collected when I entered this trade. And if I just drag this up here a little bit, and I've already sort of entered everything in here, you can see that what I mentioned was I'm going to physically buy back the 260 270, and it's going to cost me 70 cents. And then I will open a 250 260. That's going to give me $1.70 credit. Then on the put side, I will buy back the 220 230 and open up a 220 210. Now overall, if you were to do the math on this, and I'm going to do this on my hand calculator here. I've seen some people actually do it live on a calculator, but I'm just going to do it here. So we have minus 0.7 plus 1.7 plus minus 250 plus 140, and that basically equals, this whole transaction is going to cost 10 cents is what it comes out to. But what does that really mean in the grand scheme of things? Remember, we're at $684 here. So let's go ahead and execute all these trades as of today by checking on these boxes. And we'll go back up here and take a look. Oh, we're down to $644. So basically, that's our $10 times the two positions that we have, which is like $20. So $644 versus what it was at $684. So it's $40. So it's going to cost me actually $40 in profit to roll this down. I still collect 644, and I'm still in the trade, and I don't write this thing off right now and say, oh, it's a loser, I'm getting out now. If I was just to get out now, I would, if I was only to get out, I would end up with a $45 profit. So that's not exactly what I would like to do at this point. I really want to stay in this stock because I believe it's moving kind of slow. And it's not making any really huge moves, and I think that we can, it's not going to just continue to go straight down, although it might. I believe that there is a point that it's going to reach here of support, or a general market turnaround is going to bring this stock back up. But I just want to be ready in case I need to make this adjustment, and I can still be profitable in this trade. That's how you do it. I thank you for your time, and I may just go over my Apple bear call that I have, or bull put that I have on my Apple, that I may have to adjust because Apple's thinking a little bit too. Thanks for your time, and stay tuned.